This is the Asia Trade. I'm Shery in Tokyo.
I'm Avril in Singapore. The top stories this hour. Asian stocks set for a negative open as traders assess tensions between the US and Europe over Greenland. A Supreme Court ruling on many of Trump's earlier tariffs could come as soon as Tuesday. Japan's Prime Minister puts her job on the line, setting February 8th for a snap election and promising a temporary sales tax cut on food if re-elected. Plus, we begin our coverage of the World Economic Forum in Davos, hearing from the IMF chief as well as the CEOs of Franklin Templeton and Mitsui OSK.
Avril, we're coming off a global risk-off session. U.S. markets were closed, but we saw futures under pressure. The European stock 600 seeing its worst day since about 2 months or so in November. Not to mention that gold has now hit a record high, and we're continuing to see the Japanese yen gaining against the U.S. dollar and those safe haven moves at that 158 level against the greenback. We're also following Nikkei futures at the moment under pressure after 3 sessions of losses. But what was interesting in the Japanese market was the fireworks in the JGB space, because we're at record highs on those yields when it comes to the 10-year, 20-year yield at a high that we haven't seen since 1999 on expectations of more government spending as we have that early election now set for February 8th. Take a look at how the offshore yuan is trading at that 695 level against the U.S. dollar, extending those gains that we saw in the past 8 weeks against the U.S. dollar, which of course has been under pressure and in fact seeing its worst day since December on those concerns about the geopolitics surrounding Greenland. And we are now expecting those loan prime rates set by commercial banks today. We had seen some more optimism in the Chinese market after we saw those GDP numbers for last year actually achieving its 5% target. But of course, it's always a caveat with what happens with the future economy in China and whether policymakers will step in to do more.
Yeah, Shery, you talk about the uptick in long-end yields in Japan. It'll be interesting to see how cash trading for treasuries fares in the next hour. This will be the first time we're seeing them move following from Greenland tariff threats from the U.S. president. For the moment, you talked about how U.S. stock futures are down. It's worth noting among stocks Europe 600, yes, this was a really bad day, but it is coming off those near record highs. That being said, among the sectors that were the hardest hit, we saw those that were exposed to the U.S. that were affected. So that includes the automakers, the luxury-related stocks. And if you look at gold, it's hard to see at these record highs a way in which they will retreat given the geopolitical backdrop. It's also worth noting, and it's easy to forget with everything going on, that it's a year since Trump's inauguration. And look at this chart on your right. It shows you how the dollar hasn't really recovered from Liberation Day just yet, Shery.
And we continue to follow, of course, everything that President Trump is doing, especially around Greenland. German Chancellor Friedrich Merz says that he's trying to persuade French President Emmanuel Macron to tone down his response to President Trump's threat to impose new trade tariffs on European allies. Macron is said to be eyeing the activation of the European Union's anti-coercion instrument.
We are constantly experiencing new provocations. We are constantly experiencing new antagonism, which President Trump is seeking, and we Europeans must make it clear that the limit has been reached. All of this shows what a period of upheaval we are currently living in. The logical consequence for me is very clear. We must make Europe stronger. We must do so much faster than is currently the case.
Let's bring in Bloomberg's UN reporter Magdalena Del Valle. Magdalena, it seems to be that Europe is divided in terms of Germany and France and its composition of its economy and its reliance on exports when it comes to using this tool.
Hi, yes, thank you so much for having me. I mean, Germany and France definitely have different philosophies for how they want to approach Trump's threats, but I mean, across the continent, the Europeans are not happy with this move. I mean, it's especially jarring for them when you think about the fact that the EU and the US have been allies for a very, very long time. They've usually been able to work together and work diplomatically to resolve any issues. So the Europeans are all very upset, from Germany to France to the UK. I mean, Keir Starmer called Trump's comments completely wrong. Sweden's prime minister said that his country shouldn't be blackmailed. And the EU is already discussing different things that they might do. They might impose tariffs on 93 billion euros worth of US goods if Trump doesn't back down. And of course, there is the reaction from President Macron, which was definitely the strongest. He wants to use the biggest tool that the EU has in its arsenal to fight back against these threats. He wants to activate the EU's anti-coercion instrument, which could mean new fees on EU imports of US goods, charges on services by the US tech giants and other companies, curbs on US investments in Europe, or even a ban on American firms bidding for public contracts. Of course, Merz from Germany is looking to get Macron to tone down this reaction, as the German economy, as you said, relies very heavily on exports, and this measure would be very bad for them and very bad for a lot of other countries in Europe as well. But that doesn't mean that Germany isn't concerned about Trump's threats and these tariffs. I mean, just earlier, Germany's finance minister did say that Trump had reached a red line. So I do think the Europeans agree that something needs to be done about this, but just how they do it, they're probably going to need to discuss a little bit further.
How is Trump going to approach all this at Davos? What's on his agenda?
Trump has a very packed agenda at Davos this year. I mean, of course, Greenland is going to be a major topic of conversation. He's been talking about the U.S. owning Greenland since 2019, and now the issue has finally gained a lot of momentum. He's been emboldened by the successful raid in Venezuela, and so he's now coming from a major position of strength that he can probably try to leverage at the conference and during his conversations in Switzerland. However, they don't want all the conversation in Switzerland to revolve around this. And Finland's president, Alexander Stubb, even said he's worried that this crisis will suck all of the oxygen out of the conference and steer attention away from Ukraine. So perhaps Trump will be able to discuss Ukraine and other peace deals, which was a big focus for him last year. But he has said that another major goal of his at Davos isn't actually related to Greenland or Ukraine. It's actually more in the Middle East. He wants to establish the Board of Peace, which is part of his 20-point plan for a solution in Gaza. And what this means is that he wants to get a constitution for the Board of Peace, and he wants the role for this group to be really defined all by Thursday, which is a pretty lofty task. I mean, already he has sent out invitations to world leaders who would join the board, and a lot of them have been invited, like Canadian Prime Minister Mark Carney, the president of Turkey, the president of Brazil. He even invited Putin, but there are still a lot of hurdles that he needs to tackle in order for these countries to sign on. I mean, for starters, Trump is asking members to pay $1 billion for permanent membership. So there's a lot of different hurdles.
Magdalena, thank you for a very comprehensive look at the state of play here. Bloomberg UN reporter Magdalena Del Valle for us. Now, talking about the market reaction now, because the standoff between the US and Europe comes against a backdrop of resilient earnings, AI spending, keeping investors optimistic, and then you have the Supreme Court decision on Trump's tariffs. That's also possible as soon as Tuesday. Let's bring in our executive editor for Asia Markets, Paul Dobson. So, Paul, we watched the action in the past, day and a half, and to me it didn't look that bad. I don't know, what is your assessment of this, and are markets working on the assumption of an off-ramp amid all this?
Yeah, so like you say, could be worse perhaps, but that's, we've got the caveat that the US wasn't open, so it can still be worse as well. And I think people are waiting to see what Europe's response is and what sort of an escalation we get from them, whether they're willing to tough this out and raise the stakes, or whether they will look to negotiate as soon as possible. At the moment, the signs are, that there's going to be some kind of countermeasures. We have like Macron saying, hold me back, with the German Chancellor sort of trying to restrain him. But there's a lot of stage management going on there, no doubt as well. I think, The other thing is that people have seen this show so many times now. We know the way that it works. He escalates in order to de-escalate and to get people around the table. The market's been burned too many times by having an extreme sell-off on the first headlines, and then once it realizes and comes back again, you know, the people that were the first to react tend to be the ones with the egg on their face. So I think that the market is a little bit cautious not to get too carried away too quickly. But there are signs of nerves out there, right? Not least the rally in precious metals, but also more generally the dollar weakness, which I think is something, you know, that we've seen a few times now where people have been expressing that, and maybe a sort of longer-term cloud that hangs over the US, however this might be resolved.
Paul, talking about things that we have seen before in deja vu, that feeling that we get when we see geopolitical tensions and trade issues just spark up. We always talk about the weaponizing of capital, right? I remember with China and the U.S., we're talking about how much U.S. treasuries Beijing owns. We have a similar narrative right now for how many trillions of dollars of stocks and U.S. bonds the Europeans own. Is this a problem?
I do think that it's interesting, Shery, to have a think about that. You know, the one weapon that Europe has that it could deploy is this amount of US assets that are held by European governments and companies, not just US treasuries, but also US stocks. If they were to put some kind of caps on, say, how much pension funds are allowed to invest in US markets, for example, or change the rules, you know, for the example of Norwegian's pension funds, you know, and see a reduction in the US holdings, particularly on the debt side, that might start to cause some problems for US markets in the short term, which could put a little bit of pressure back in the Trump court. So I think that that's interesting, but it also seems that most people think that's a pretty unlikely scenario for a couple of reasons. One, it's quite hard to control those capital. Two, if you do that and if you signal it, you know, the problem is it's also going to hurt the rest of your holdings, so you're going to inflict some pain on yourselves as well as the rest of the world. And three, you know, who knows, it could set off quite an unforeseeable chain of events from there and may not be worth it. But it wouldn't be a bad thing, you know, some of the strategists that we've spoken to are saying, to remind Trump that that is something that's out there. And you know, these are the things that people are working through at the moment. How can Europe respond? What's the best way of calibrating a response? I think, you know, there's also the possibility that things could be resolved in a pretty decent way here. You know, Greenland has probably been neglected. I don't think that Trump is completely wrong here. It does have resources that could be exploited, you know, and pointing this out to Europe and trying to get them to do a little bit more on this, you know, reminding them again of the grudges about the defense spending that the US has been putting a disproportionate amount into the pot. Not all bad things. So there are ways that maybe Europe can take this on board and can move forwards from here that helps markets in the longer term.
Paul, thanks very much. Our Bloomberg executive editor for Asia markets, Paul Dobson. Coming up on the Asia trade, we'll talk market strategy with OCBC's Vasu Menon, plus a look at what the US-EU tensions mean for Asia Pacific with a former Australian ambassador to the US. Much more ahead. This is Bloomberg.
Take a look at how Japanese assets are setting up for the market opens. After 3 sessions of losses for Japanese stocks, we're seeing Nikkei futures under pressure and the Japanese yen holding steady. We saw some gains on those safe haven moves with the global risk-off session, but right now we're holding at that 158 level. What will be interesting to watch today will be the JGB space, though. Remember, 10-year and 20-year yields at the highest level since 1999 and 30 and 40-year yields at the highest since their debuts ever. So there's a lot of expectation of more fiscal spending, and we finally have a date now for the early election. That will be February 8th. The caveat, though, for investors will be the election outcome. The complete outcome is always in the air, right? The Komeito party has moved to align with the main opposition party, so the details might be difficult to confirm. Let's bring in our economy and government reporter Yoshiaki Nohara for more on the state of Japanese politics. But right now, Yoshi, it seems investors are cheering the fact that we might see those temporary sales tax cuts on food if the Prime Minister's coalition wins. What exactly are we expecting to happen?
Right. So, you know, the talking point right now is, as you mentioned, the food items for sales tax. And Prime Minister said last night that she proposes to exclude food items from sales tax for 2 years. But the thing is that everybody else is calling for food tax cut to zero or more or less to a low level. So everybody is calling for tax cut. So that means that there's justifiable that there's some concerns about fiscal situations in Japan, and therefore we're seeing the rise in long-term bond yields, which is not surprising at all.
Yeah, not forgetting we have a 20-year JGB auction today as well. What is your sense of the pressure on the long end and how that, along with the yen volatility, might actually turn out to be a political issue for Takaichi?
There's it's a very clear dynamics going on in the markets. And markets is clearly sending signals about what they think about what this election could mean. Meaning that, as I mentioned, that the yen, it's coming back a little bit, strengthening a little bit, but still highly, at a weak level, and authorities here have been issuing warnings about its weakness. But at the same time, you see a consistent pressure on upward pressure for long-term yields here, and especially 10-year yield bonds yields. When they go up, that's going to affect the people's livelihoods because it's linked to the mortgage rates that people are going to have to pay when they decide to buy houses here. So that's a big deal for regular people, not just investors.
Yeah, we'll be watching how the Bank of Japan will react this Friday with their policy. And of course, some people are now saying that although the consensus might be that they might hike in July in the summer, that they might bring forward that rate hike given the weakness of the Japanese yen. But something that I mentioned earlier, Yoshi, that I'm also curious about, the fact that the Komeito party has aligned now with the main opposition party, does this change the calculus and makes things a little bit more difficult to predict?
Shery, the uncertainty is the word, we have to embrace here. It's very difficult, even though I go through reports and, check everything that I can to find out, what would be the ramifications of this, the kind of changing coalition partners here. But it's so difficult to see, how this change is going to affect the outcome, especially because of the fact that the Komeito is decided to form an alliance with the largest opposition. But we don't know yet which is going to be the key battlegrounds for this election in terms of the battle between the ruling coalition and the new party formed by opposition parties. It's hard to know, really, yeah.
Yoshiaki, we'll leave it there for now. Always great to get your insights. Thanks so much. Bloomberg's economy and government reporter Yoshiaki Nohara. Now, the CEO of Japanese shipping giant Mitsui OSK says the company is seeing signs of gradual stabilization after what he describes as a very difficult 2025. Takeshi Hashimoto spoke to us from Davos about the geopolitical and trade risks he's watching.
25 was a very, very difficult year for us. But particularly for the second half of the 25, we observed that the situation was gradually stabilizing. So that at the moment, our sentiment is relatively optimistic about the future in 2026. Still, lots of things are happening, particularly for the Middle East situation and Ukraine situations, and also that lots of the trade tensions between U.S. and other countries. But so far, that we can adjust ourselves.
There are global trade choke points, and the Strait of Hormuz is one of them. What's your own reading? Is the risk rising or easing at this stage?
We cannot ignore the risk. At the moment, the all trade passing through Hormuz Strait is okay. That we are managing that so many vessels, particularly for tankers and LNG carriers, it's very important for the global business. Of course, we have some concern about the political situation in Iran and the action of the U.S., Israel, etc. So far, it should be all right.
People talk about the possibility of a regime change in Iran. Would that encourage you to invest more? What would it take for you to do that?
Yeah, very difficult question, but the regime change cannot happen overnight, and it will probably create the very confused period, 3 years, 5 years, or even 10 years. Therefore, to be honest, that I do not like that the dramatic change at the moment.
Mitsui OSK line CEO Takaichi Hashimoto with Bloomberg's Hasinda Amin in Davos. Other top global headlines that we're following: top Iranian officials have called for leniency for some protesters arrested during the latest wave of unrest. The president, judiciary chief, and parliament speaker made the call in a joint statement, even as police pledged to continue cracking down on dissent. Rights groups say around 3,500 people have been killed in the response to protests over worsening living conditions. Taiwan says China has sent a military drone into its airspace for the first time. Taipei says a Chinese reconnaissance drone was in the airspace for about 4 minutes early Saturday, above the range of air defense weapons. It comes as Taiwan's defense ministry says it wants to acquire an extra 200,000 drones and 1,000 unmanned vessels using a special military budget. We have more ahead on the Asia trade. This is Bloomberg.
Let's take a look at markets as we watch out for Europe's potential response to Trump's threat of tariffs on major allies in relation to Greenland. And we are seeing there the retreat slightly, a bit softer, actually moving sideways from those record highs on precious metals. What is also interesting has been the reaction function in other safe havens, including the Swiss franc, given how the traditional havens, the dollar, the yen, they kind of have troubles of their own of late. It kind of stands out amid the havens. We have been seeing that moving in the past day, of course, as we continue tracking the market reaction to Trump's moves. Shery?
Yeah, to your point, I mean, the Japanese yen again under pressure, despite that short-lived safe haven move that we saw after President Trump's threats of more European tariffs. And you said it, it's been a global risk-off session, right? I mean, U.S. markets were closed, but we saw the downside pressure on U.S. futures. We saw the 10-year Treasury futures also under pressure, implying a 2 basis point increase in the corresponding cash yield when markets open in the United States. The Bloomberg Dollar Index also under pressure. In fact, the dollar seeing its worst day since December. So this threat of more tariffs on 8 European countries that have opposed President Trump's plans to acquire Greenland really playing through the markets at this point. The U.S. Supreme Court ruling on the legality of reciprocal tariffs soon is also in focus at this point. But we'll be watching very closely what President Trump has to say in Davos at the World Economic Forum this week, because he just shook the foundations of the European Union and NATO alliance, and this being his third trip to Davos since becoming president, including in his first term, will be really interesting what he has to say to global leaders there. We have more ahead on the Asia trade. This is Bloomberg.
You're watching the Asia trade. Now, Europe is weighing how to respond to President Trump's latest threats over Greenland. Some investors speculate the bloc could sell U.S. assets equivalent to trillions of dollars in bonds and stocks to push back against his renewed tariff war. But most strategists see that as unlikely, since the bulk is held by private funds, and such a move would also hurt Europe. U.S. assets held within the EU amount to more than $10 trillion, according to U.S. Treasury Treasury data, with more in the UK and Norway. Now, what seems pretty clear, because this step would certainly be a very extreme course of action if Europe chooses this way to retaliate. You're looking at the euro against the greenback. We had the likes of BNP Paribas saying 120 this year possible if we see renewed FX hedging, if we see Europe kind of reintegrating everything together. We are also watching for whether there's further safe haven moves into the Swiss franc. We've been talking about how among the havens that kind of stands out as the yen faces troubles of its own. And then, of course, you have the dollar that has been struggling for the past year. Let's bring in our chief FX and rates Asia correspondent, Ruth Carson. So, Ruth, what are we seeing on dollar and positioning among macro investors?
Absolutely. Macro investors, macro traders having a field day in many aspects, despite all the headlines that we're seeing whiplashing markets, plenty of opportunity to position on the dollar crosses. Now, one thing, though, appears to be clear. As all these geopolitical tensions flare up in Europe, the dollar is under pressure. On a larger scale, we're looking at a de-dollarization theme continuing. And it was fascinating to watch how the euro actually bounced back early yesterday, for instance, as people go, hang on a minute, the US here is putting pressure on Europe, but Europe has its own firepower too. And yes, absolutely. Do you want to hold dollars when the US is the aggressor at the moment? Now, no one is suggesting that, anyone is going to abandon the dollar anytime soon, but definitely you're seeing pressure as people start to really question US exceptionalism here.
It'll be interesting to see the market reaction function in the evening when U.S. markets come back from a long holiday, right? What are we expecting in terms of positioning on treasuries, though?
Absolutely. If we look at futures actions, because, Shery, as you pointed out, the US was on holiday yesterday, we're seeing slight pressure this morning, so we could see cash open under a little bit of pressure as well. Definitely the bond investors are weighing not just the tariff risk here, but also what's going to happen when it comes to the tariff front as we await the Supreme Court decision. Investors are also wondering what's going to happen with the next Fed chair. There's plenty of news headlines around that as well as the Fed's policy path. So if we're talking about a tug of war, treasuries are definitely in the crosshairs here as to where things could go. We're seeing benchmark 10s at 422 at the moment. Whether it stays there or not, even over the next couple of hours, depends to be seen.
Well, at least we have confirmation that the snap election will be held in Japan February 8th, right? Is this a sign that macro traders are getting and signaling that as a way to sell the yen?
Great question, and it's the multi-trillion-dollar question that's sort of gripping all the currency traders right now. Dollar yen is at the moment at around 158. The yen at 158 is cheap. That is unanimous. Now, that said, you would be pretty brave as well to go all out to buy the yen right now. And all we have to do is actually look at positioning, not just CFTC data, but we have a function on the terminal called FXFM. And if you put in the data right now, it shows that options traders are penciling about a 40% chance that the yen would hit 165 before June. So despite all the arguments around how cheap the yen is, well, positioning suggests something else indeed.
Okay.
Bloomberg's chief FX and rates Asia correspondent Ruth Carson there with what we're watching in the FX space. We're also looking at the global economy, and we're getting some more insights coming from the IMF Managing Director, Kristalina Georgieva, saying that while the global economy has held up well, challenges are mounting from fresh trade tensions to the disruptive impact of AI. We spoke with Georgieva in Davos after the IMF raised its outlook for global growth this year to 3.3%.
Well, let's start with the good news that the world economy has proven to be remarkably resilient. We are projecting 3.3% growth for this year. We expect 3.2% next year. And when we look at the sources of this resilience, four things stand up. One, trade tensions have not been as dramatic as we feared. Yeah. Two, private sector, incredibly agile.
Yeah.
3, and we don't talk enough about it, good policies. The fact that governments have developed tools to act responsibly for AI and the promise it holds. So your question is correct. Would this resilience hold? Too early to say what exactly the impacts of new trade tensions is, but we know that when we have more uncertainty, bad for business, bad for households.
But MD, does this feel different? Because this is something over Greenland, so this touches sovereignty. In 2025, what held the economy together is that not many countries retaliated. This could be different.
Well, we shall see. I would not venture into speculations what is going to happen or not happen. What I would say is that it is very important that we recognize we are in a world of unthinkable happening. And in this world, I have one advice to people: stay calm, assess with no emotion where you might want to go.
How difficult is it to assess the impact on the economy if we do have these extra 10% tariffs on certain European countries? Who would lose?
We have run all kinds of simulations of what may happen. And what we do see in this simulation is that we deviate from keeping trade more or less on the right track. That could halt growth down. What I want to stress is that the best way forward, find a path to agreement. And that is going to be good for everybody everywhere.
I mean, there's, again, quite a lot of, I guess, concern on the ground as President Trump arrives here that they've already left 70 international institutions. Are you worried that they could eventually leave the IMF?
To be very frank, no. I think we are great institution for the members, 191 of them, including the United States. So let me give you 2 reasons why I'm not worried. Number 1, we cost no money. We actually work like a savings account. The US lends money through us. We pay back with interest. For the last 2 years, the US got $3.1 billion in interest from the on-lending they do with us. Number 2, we actually are strictly focused on the economy and on reforms. And that is great for everybody's business, including for the US. And there is no other institution. When there is fire, we come and we put it down. And when you look at the world today, Francine, do you know how many fires we are putting down?
Many.
50. We have 50 programs. And of course, our determination is to continue to serve the membership, to be good for business, to be good for households.
You mentioned a lot AI in your World Economic Outlook. How much AI investments are you expecting this year to help the global economy?
Well, what we are seeing is that the enthusiasm to invest in AI is rewarded by profitability so far. So what we expect is to see continuation of this flow of funding in AI at the cost of investing in many other worthy areas. We are not yet worried about frothing that may be like dot-com bubble, but we are cautioning people that they really need to follow very closely the productivity impact of investing in AI. So far, there have been gains, but will they be sustained? Remember, we were assessing the growth impact of the AI between 0.1%, 0.8%. That's a big difference. Yeah. And therefore, the reward on investment is what we are a bit worried. Would it materialize with the scale and the speed that justifies this massive flow?
MD, I also want to ask about 2 countries specifically. One, Venezuela. What do you think will happen in Venezuela, especially what we've seen over the last 2 to 3 weeks with the removal of Maduro?
What is specific for our engagement with Venezuela is actually it is non-existent since 2019. Our membership did not recognize the authorities, and at this point has not yet moved towards recognizing them. Nonetheless, we have kept a watchful eye on Venezuela. All through this time, what we see is devastating. The economy shrunk dramatically. Inflation is on the rise. We worry about hyperinflation. 8 million people left the country. In proportion to the population, more than Ukrainians that run away from a war. So how you turn this around, given that there is really no credible data, this is going to be extremely difficult. We are ready. If the membership says, you're good to go, we will immediately step up engagement with Venezuela. And I can tell you, for the people of Venezuela, I just hope that there would be that kind of progress soon.
IMF Managing Director Kristalina Georgieva speaking with our colleague Francine Lacroix in Davos. More ahead on the Asia trade. This is Bloomberg.
The CEO of Korea Exchange is confident that the world-beating rally in South Korean stocks could extend as the nation presses ahead with efforts to improve shareholder returns and lure global capital. Speaking exclusively to Bloomberg, Chung Eun-bo also shared where he sees the benchmark Kospi index headed now.
I think the Kospi can extend beyond 5,000 and towards 6,000. Since the year before last, we have made efforts to increase shareholder returns through various programs, which have been supported by the government through policies and legislative revisions. Recently, South Korea's main industries, such as chip, defense, and shipbuilding, have been more competitive, which appears to have led to a new value up for the Korean stock market. It's nearing 5,000, but I think beyond that, even 6,000 is possible.
Now let's talk about trading hour extension. So Korea Exchange said this week that it's going to extend trading hours to 24 starting the end of 2027. And it's going to introduce 12-hour trading starting this June. Why does Korea Exchange have to pursue this extension of trading hours?
In light of these global trends and also to attract foreign investors, I believe expanding trading hours is inevitable. While monitoring the transition to 24-hour trading in the US this year, we believe we should move to a 24-hour trading system ourselves by at least the end of next year. Doing so would help attract overseas investors and ensure greater alignment with global market standards. As a transition, we plan to start 12-hour trading from June.
The won's weakness has been a big concern for South Korean authority, and once South Korean stock become a lot more attractive than now and have retail investors come back to the domestic market, do you think that can help stop won's weakness?
I think it would absolutely help. From a macroeconomic perspective, despite Korea running a sizable current account surplus, I believe the fundamental reason the won continues to weaken lies in the capital account. The first factor is the outflow of foreign currency driven by corporate overseas investment. The second is capital outflows stemming from domestic investors' investments in overseas assets. Together, these flows have been a key driver of the weakness in the won. In that context, the impact of portfolio investment on the exchange rate, often exemplified by so-called global ant investors, could begin to normalize as domestic investors return to the local market, and more importantly, as foreign investors increase their investment in Korea. I believe that process could serve as a catalyst for stabilizing the currency exchange rate.
When you said a few years, South Korea will be able to get an upgrade to the DM index with the MSCI, and how soon, a few years, do you mean?
The president aims to join the Developed Market League within his tenure, so that appears to be the final target that South Korea should pursue. It might take a few years, as it takes 1 or 2 years before the final reclassification is determined after joining the watch list first. Even if we start the process right now, the procedure will take several years.
And there are also concerns that the upgrade to the DM index would actually trigger funds outflows. What's your thoughts about these concerns that the upgrade may not be necessarily a good thing for the South Korean stock market?
Fundamentally, global capital is far larger than domestic capital. It's so large, the two are hardly comparable. If Korea is reclassified from an emerging market to a developed market, there will be mandatory allocation requirements for global capital. Therefore, I believe the inflow of capital will be substantially greater than the outflow.
Let's talk about some of the issues related to Korea discount. So one of the priorities that the Korea Exchange have is delisting the so-called zombie firms in market and accelerating the delisting process. Why is this important to resolve Korea discount?
About 2,800 companies are listed in South Korea. In the US, about 5,500 companies are listed on the New York Stock Exchange and the Nasdaq. The US GDP is about 15 times bigger than South Korea, while the market capitalization is 30 times larger. But the number of listed firms is only 2 times bigger. If you do the math, the market cap of individual firms in South Korea is about 1/15. In that sense, we think too many companies are listed in South Korea. In the future, these zombie firms must be forced out quickly to restore market trust. These unprofitable companies are easy targets of stock price manipulations and other unfair trades. To enhance confidence in our domestic stock market, we should do speedy work on rooting out zombie firms.
Korean Exchange CEO Jong Eun-bo speaking exclusively with Bloomberg's Yoo Kyung-lee in Seoul. Now, Hyundai Motor will also be in focus at the Open in Seoul. More analysts are raising their price targets on the stock, citing improved fundamentals. Let's bring in our Asia Tech correspondent, Annabelle Drawless. Well, Hyundai Motor has had a stellar start to 2026. There's all this talk about the robotics value chain as well. Is there more to come? How sustainable is all this?
Yeah, well, that's sort of, I guess, the big question. But certainly when you take a look at analysts, they're seeing some further gains from here. I do think it's interesting. We saw that stock surging more than 13% yesterday in the session, in part because of these analyst upgrades. But you actually look at where those analysts have raised their targets to, and you're kind of sitting close to that right now. So, for instance, HSBC is looking at 580,000 won a share there. They've raised that from 320,000 won. Mirae Asset Securities as well at 520,000 won. Up from 360,000 won, but you can see this morning, I mean, you're already trading around that 500,000 won mark. So, yes, it does appear, at least from analysts, that there are some further gains to come. But as you said, it is that sort of optimism around the robotics picture in particular, because we were just showing some vision there of the Atlas humanoid robot that was unveiled at CES. That's actually from Boston Dynamics, which is a subsidiary of Hyundai Motor, but essentially lots of optimism around embodied AI at the company. They've got a partnership with NVIDIA as well. And so any sort of investor fears that we'd had that maybe Hyundai Motor was sort of falling behind when it came to cutting edge or leading edge tech is sort of being dissipated right now. And so you have seen that stock run up off the back. As you said, Hyundai Motor up around 60% so far to start the year. So yes, and that is also, of course, leading analysts to be more positive on the earnings outlook. And that is really what's contributing to the gains we've had so far. Yeah, we had so much fun, Annabelle, really at CES in Las Vegas with Hyundai Robotics as well, right? And just looking at the robots, and really that's been all the rage across the world right now. And of course, it's all to do with AI and its development. Another Korean company that we're watching, Furiosa AI, and they're planning a new funding round. Yeah, this is a really interesting one because, of course, Korean chip makers are famous, but Furiosa AI is sort of more on the startup side, and it's a company that specializes in inference chips. Now, inference chips are used for essentially the deployment or running AI models. You're looking at the founder there who established the company about 10 years ago, but it has started to get a lot more investor attention, this company, in recent years, given that it does have these inference chips and these inference chip capabilities. We understand, for instance, they're looking to IPO maybe as
as soon as next year. But right now we're also hearing from sources that they're looking at another funding round. So this would be a Series D. We're told by sources they've already appointed Morgan Stanley, Mirae Asset Securities as co-advisors on this. They could be looking to raise somewhere between $300 and $500 million. And the goal of this is really about building up their capabilities, because they've got that mass production that's set to start for their second generation inference chip. They want to be able to work on building out the third generation inference chip. And then they're also, again, looking at essentially global expansion. So, yes, more funding possibly to come for the company.
Bell, on building up capabilities, the Korean government also taking a novel approach to finding the country's best homegrown AI model.
Yeah, this is really quite the story, and there's quite a lot of detail in it as well. But what I think you need to understand, sort of at that top line level, is that the South Korean government is really on the hunt, essentially, for the next homegrown AI champion. But the path that they're taking to this is sparking comparisons actually to the Netflix survival drama Squid Game, of course, that people know. But AI Squid Game is what it's being dubbed. So it's a competition that's been running since August of last year. It's set to run for at least a year as well, and the format of it is pretty ruthless, which goes back again to that nature of the show. But the competitors in it, they're essentially facing elimination every 6 months on their technology, and right now, for instance, we've seen a unit of Naver being eliminated. LG and O.S.K Group, subsidiaries of those companies, though, are still in the running.
Right. Annabelle Drillers there joining us from Hong Kong. Annabelle and I will be back with more on tech in the region and the impact of the AI boom on energy. This is the next episode of Bloomberg Tech Asia, coming up on Friday, 8:30 a.m. Hong Kong time, 7:30 p.m. Thursday if you're watching in New York. But for now, stay with us on the Asia Trade. You're watching Bloomberg. We're seeing a little bit of downside on Australian markets, of course, extending that global risk-off session that we saw in the previous day. We're seeing some of those miners pull back on rare earths. Nikkei futures also down 0.5%. As we're headed towards the Korea Open, futures also down. Market opens in Seoul and Tokyo are next. This is Bloomberg. This is the Asia Trade. We're counting down to Asia's major market opens after a global risk-off session sent U.S. futures under pressure, not to mention the Stock 600 seeing its worst day in about 2 months, and gold really rallying to that record high. Avril, really to do with President Trump's renewed threats on Europe with tariffs.
Yeah, analysts talking about what to watch in terms of whether this revives the so-called sell America trade. Certainly, we've been seeing that playing out in the dollar the past year, whether this deepens. And we are seeing some of that reaction as well, even on the pickup on the havens, including the Swiss franc, Shery.
Yeah, and the Japanese yen a little bit, given that we saw the worst day for the U.S. dollar, as you mentioned, Avril, in about 2 months or so since December. And this, of course, leading to really that risk-off sentiment across the Asian session. And you can see the Nikkei falling for a fourth consecutive session right at the open, down about 0.6% as we're following the U.S. dollar Japanese yen holding steady at that 158 level. And what we've been watching is the JGB yield space, because we have seen fireworks here after we saw the confirmation of the early elections here in Japan for February 8th, and just speculation that we will see more government spending. So the 10-year yield at that 229 level and holding at around the highest levels since 1999. We do have a 20-year JGB auction, so do watch out for that. And of course, we do have the Bank of Japan policy decision later this week as well. Take a look at how Korea is also setting up, because the Korean market has really bucked the trend of that risk-off session, because we saw 12 sessions of gains already for the Kospi. It's been an amazing rally. We're talking about 90% gains in the past year. And a lot to do with every sector of the South Korean market almost rallying, surrounding the robotics theme, surrounding the AI theme. We are talking about Hyundai Motor, for example, gaining about 60% this past month. So you can see the Kosdaq index, for example, tech heavy, gaining 0.4% at the open. The Korean won, though, continues to weaken against the US dollar. This is a very interesting thing to watch because that continued weakness, of course, really being felt with investor demand for perhaps some diversification away from the Korean currency. We have seen Hyundai Card, for example, now selling dollar bonds in the local market. So we will be watching what happens to the Korean currency as well, Avril, because we continue to see that weakening despite the fact that, as we mentioned, the greenback is under pressure as well.
Yeah, let's take a look at how U.S. Treasuries are faring because this is the first time we're getting cash trading since Trump's fresh tariff threats over Greenland, these threats of tariffs to these major allies in Europe. And we are seeing that move of almost 4 basis points on the 10-year. So the continued upward pressure in the U.S. Treasury yields, perhaps on the long end, that read-through might be a bit murkier given what we're seeing in Japanese debt. In terms of U.S. stock futures, you're seeing that continued decline, and the dollar, interestingly, is picking up a little for the moment. To what extent, again, is the question whether all this revives the so-called sell America trade. Let's bring in our next guest who says lower rates and a softer dollar bode well for Asia ex-Japan equities. With us now is Vasu Menon, Managing Director of Investment Strategy at OCBC. So Vasu, let's start there. Do you think this is another reminder of the potential for sell America, given how we've been seeing a bit of a pickup on the dollar, but, it's been on a slide?
Well, I wouldn't say sell America. I would say, investors are going to be a bit more cautious in America. We have a neutral call in America. We don't have an underweight in America. We think that, the U.S. is going to remain as a key engine of global growth. AI is a theme that's going to continue for a while longer. And, there will be opportunities in America as the markets go through volatility. But having said that, our greater conviction is towards Asia ex-Japan, as you mentioned at the onset of the introduction. And we think that, there are greater opportunities in Asia ex-Japan as the US dollar weakens, as concerns grow about America, but we don't think America is going to fall off the cliff.
Why ex-Japan? How do you feel about Japan?
Well, we like Japan as well, as in we are neutral in Japan. We are overweight on Asia ex-Japan. With Japan, you've got political undercurrents, you've got uncertainty about BOJ policy, the weak yen. You put those things all together, it means greater uncertainty. With Asia ex-Japan, the valuations are more attractive, and we think that the case for Asia ex-Japan is stronger. We like China, we like Hong Kong, we like the Singapore stock market. We think that there are opportunities in all those markets. But again, opportunities for investors with the risk appetite, with a medium-term view. We're not taking a view of the next 3 months or 6 months, but a view of perhaps 12 to 18 months.
I want to get to China, but first, on your call on Japan and your neutral rating there, we are now seeing Citigroup seeing risks of 3 BOJ rate hikes given the weakness of the Japanese yen. If we do have more accelerated moves coming from the central bank, are you seeing more risks in this market? We are headed, of course, to a decision on Friday.
Well, clearly there are risks as far as Japan is concerned. We're not looking as many as 3 rate hikes. We don't think that's going to happen just to defend the Japanese yen. The yen has been weak, and you have not seen the BOJ move in any significant way in 2025. We think the BOJ will be cautious in its move, especially with Takaichi talking about greater fiscal stimulus, the cut in the sales tax for food products. I think all that will mean that the economy is going to get a boost if she wins a more decisive victory in the Japanese parliament. And so the BOJ is going to be a bit more cautious because more stimulative fiscal policy will also mean greater inflation. And so, I think the BOJ will tread with caution. There's some degree of political pressure as well on the BOJ not to act too aggressively. I think Takaichi is trying to restart the economy, and, BOJ aggressive rate hikes will clearly not go in sync with what she's trying to do.
Talking about caution, Vasu, why are Chinese policymakers being so cautious? We saw fourth quarter GDP numbers really decelerating to the slowest pace since the COVID lockdown. So why aren't we expecting, say, the PBOC to do more? We have the LPRs being decided by commercial banks, but we are expecting them to follow what the central bank does.
Well, the playbook with the Chinese government and the PBOC has been one where they take measured, policy changes. Don't expect the big bang to come out of China because, I think the government appears to be quite happy with the 4.5-5% growth rate. They want to stabilize the property market. They want to see quality growth as opposed to just, very strong growth. There's a lot of headwinds as far as Trump and U.S. policy is concerned. So I think the Chinese government is also, and also the PBOC to some extent, quite cautious about firing too many bullets too early. So they could be keeping some dry powder. So don't be surprised if there's more stimulus, during the course of 2026. But it'll be a more gradual build-up. I don't think they believe in the Big Bang approach. They believe in, taking a more, measured, gradual approach to policy.
With that in mind, how do you feel about yuan or other Asia currencies as a sort of diversifier? I heard earlier in the week somebody talking about the renminbi as a sort of haven because the PBOC messaging is quite clear in terms of the tolerance for yuan strength.
That's right. Clearly, I think Asian currencies will strengthen, partly because, the Chinese currency could hold ground. Plus, I think the US dollar, as you mentioned earlier, is likely to weaken with what's happening in the US right now. Fed independence under challenge, the Fed expected to cut rates, things that are happening in Venezuela and Greenland, all those will weigh on the dollar and contribute to yuan strength, including strength of other Asian currencies, which is another reason why we're also positive on Asia ex-Japan. We think that, the currency strength in that region will be another attractive point for global investors.
Vasu, before we let you go, we are seeing an incredible rally continue in the South Korean market. We're talking about the Kospi just being up the entire year that it's been trading, up 13 times, and that will be the longest winning streak matched since 1984. We had seen this rally starting from last year, but really restricted to semiconductors, the tech play. Could this widen, and how healthy is this?
Well, you're right. The South Korean market has done very well, but I think to a large extent, again, driven by AI, continued optimism towards AI, towards the semiconductor sector. That's benefited the South Korean market. It could widen. The rally could widen. But once again, our greater conviction calls are really in China, Hong Kong, Singapore, to some extent, Malaysia as well. We're neutral on South Korea, but we think that there's a chance that the market could continue to do relatively well in 2026. But on a relative basis, we think, there could be opportunities elsewhere too.
Vasu, thank you for your time today. Always nice to catch up with you and hear your thoughts on the markets. Vasu Menon, Managing Director at OCBC. Now let's take a look at what's moving specifically in Australia. Of course, yesterday, given the precious metals rally and then what we saw in rare earths, the materials sector was the outperformer. You're seeing a bit of that reversal today. Rare earth stocks are down. The added driver is NHK reporting that Japan is set to spend 39 billion yen from its reserves for rare earth supplies. So you wonder how this benefits perhaps some of the rare earth related stocks in Japan at a time where governments are really trying to garner access, secure access to critical minerals. Shery.
And Avril, take a look at how Shionogi is trading here in the Japanese session. We're talking about this pharmaceutical company that's now investing $2.1 billion to raise its stake in ViV Healthcare to 21.7%. It would make it an affiliate of this HIV drug maker, and ViV will be selling new shares to Shionogi. It will also be buying back shares from Pfizer. Shionogi now saying in a statement Tuesday that ViV is a joint venture between Shionogi, Pfizer, and GSK, and it's an interesting trading session today for Shionogi because it's gaining ground and bucking the trend in the Japanese equity space where we're seeing the topics just lose ground. The topics only consumer staples gaining about 0.4%. Of course, we are watching the election for February 8th and what might that do for government spending and the retail sector. This is Bloomberg.
We are constantly experiencing new provocations. We are constantly experiencing new antagonism, which President Trump is seeking, and we Europeans must make it clear that the limit has been reached.
Blackmail between allies of 250 years. Blackmail between friends is obviously unacceptable. To my knowledge, this is the first time that an economic instrument, tariffs, which you know we don't think very highly of, has been used for geopolitical reasons.
Alliances endure because they're built on respect and partnership, not pressure. That is why I said the use of tariffs against allies is completely wrong.
A chorus of European leaders on President Trump's push for a U.S. takeover of Greenland. Meantime, German Chancellor Friedrich Merz says he's trying to persuade French President Emmanuel Macron to tone down his response to President Trump's threat to impose new trade tariffs on European allies. Macron is said to be eyeing the activation of the European Union's anti-coercion instrument. Let's bring in Bloomberg Deputy Managing Editor Balazs Pence. Balazs, good to see you. So talk to us about Macron's approach, because we have been seeing, European leaders, maybe their approach is to lie low, don't draw Trump's ire, but that certainly hasn't worked. So why not come through with a show of strength? Might Macron's approach actually make more sense here?
Yeah, I think the time for lying low might have passed on this issue. At least we saw that a lot of European leaders are quite angry, and they are talking about having reached the end of the line on this issue and the need to respond. Now, the question is, what will they actually do about it? And as we heard from Chancellor Merz, there are different approaches to this. And now we're back to the kind of similar space where we were over the summer before there was a trade agreement between the U.S. and Europe, talking about retaliation, talking about how Europe can use its own tariffs, its own economic measures to respond to any action by the U.S. And there is a risk, it sounds like, that there might be sort of this tit-for-tat escalation. And it sounds to me like that's what Merz is trying to avoid going to. And that's what someone like Macron is more willing to take on right now.
Yeah, especially if you're more exposed and dependent on exports, right? The use of this anti-coercion instrument, the ACI, would be very painful for the Europeans as well. What can we expect then in terms of Davos? Because we know that the president will actually be facing all of these European leaders there.
That's right, and we heard from the Finnish president, who's of course touted as a great Trump whisperer, that there's a risk that Greenland will just completely dominate Davos and crowd out any other topic of discussion. The good thing, I guess, is that all the leaders are there and they can talk to each other directly, and they don't need to depend on intermediaries to discuss these very important issues. But that's exactly what the next few days will be about. These people trying to come together and Europe trying to unify their approach and avoid fracturing and avoid kind of being picked off one by one. As long as Europe can stick together, they have a chance of giving a more robust response to whatever comes from the U.S.
Bloomberg Deputy Managing Editor Balazs Pence there with the latest on, of course, those conversations ongoing between Europe and the United States. And what happens to Greenland, as we're now seeing more narrative coming to really fruition, where we're talking about weaponizing capital. We're talking about the fact that the Europeans own more than $8 trillion of U.S. stocks and bonds. So we'll continue to hear what happens to that as those hostilities rise. But at the moment, you can see European futures under pressure because of the ongoing threats of tariffs. We had seen European stocks already falling from record highs. The Swiss franc, for example, one big safe haven. It led the rally in currencies against the U.S. dollar, which saw the worst day since December. We continue to watch also the bond space as well, because we had some idiosyncratic news, Avril, that potentially we could see some progress in French discussions over their delayed budget passing parliament. So that's been another thing that markets in Europe have been following.
Shery, here are some other top global headlines we're following. Top Iranian officials have called for leniency for some protesters arrested during the latest wave of unrest. The president, judiciary chief, and parliament speaker made the call in a joint statement, even as police pledged to continue cracking down on dissent. Rights groups say around 3,500 people have been killed in the response to protests over worsening living conditions. Taiwan says China has sent a military drone into its airspace for the first time. Taipei says a Chinese reconnaissance drone was in the airspace for about 4 minutes early Saturday, above the range of air defense weapons. It comes as Taiwan's defense ministry says it wants to acquire an extra 200,000 drones and 1,000 unmanned vessels using a special military budget. We have more ahead on the Asia trade. This is Bloomberg.
Japanese government bond yields soaring again in this session on expectations of more government spending, as we saw Prime Minister Takaichi now officially confirm the early election for February 8th. We're talking about the 40-year yield now hitting 4% for the first time ever since its 2007 debut. Already the 30-year yield was already at the highest level on record as well. We have the 10-year yield, 20-year yield at the highest level since 1999. We have heard from Prime Minister Takaichi promising a temporary sales tax cut on food if she wins a fresh mandate for her new coalition. And given, of course, that conversation about tax cuts, not only coming from Prime Minister Takaichi, but from other politicians as well, you can see that retail stocks have been gaining ground in the Japanese session, despite the fact that we're seeing the broader index under pressure for a fourth consecutive session. Let's discuss a little bit what's happening right now with Japanese politics. Bloomberg Opinion columnist Reed now saying that Takaichi's call for an early election, alongside the rise of a new centrist movement, does not necessarily spark a revolutionary moment in Japanese politics. Reed now joins us with more on his latest piece. Of course, we are seeing investors, the markets, just react unilaterally on expectations that there will be more government spending, Reed. But at the same time, given that Komeito has now aligned with the main opposition party, how should we be taking the state of Japanese politics right now?
Well, certainly we've had a lot of interesting things happen in the last couple of days. When Takaichi came out and she called the election yesterday, she made quite a big splash about saying that she wanted to make it into a mandate on her plans for, responsible spending, but the emphasis there on spending. She called for an end to the era of excessive austerity and made clear that, she wasn't particularly worried about these movements that we're seeing in the bond market. As you mentioned as well, we've also had a bit of a reconfiguration in the last couple of days with the opposition. We've had the main opposition party, the CDP, join together with Komeito, who are the former long-time coalition partner of the LDP, to form this new centrist reform alliance, as they're called, to tackle this election. It's obviously an exciting moment when you see something like this happen. I am a little bit skeptical, as I lay out my column today, that this is going to mark any revolutionary moment in Japanese politics. We often see these kind of realignments just before an election that often tend not to have as much of an impact as the headlines might initially suggest.
So what does the alliance need to do more of to show voters that, to your point, this is not old wine in new bottles?
Well, I think there's a lot of things that they need to do in terms of presenting an alternative vision for the country. Now, Prime Minister Takaichi has already somewhat cut the legs out from under the main point that the opposition were intending to fight the election on, that is a reduction of the sales tax on food to zero. That is a position that the CDP previously offered when they were contesting last year's election. Now, Takaichi has now endorsed that position herself. Whether that actually comes to pass or not, we'll have to see. She said she previously had endorsed it, and then when she became Prime Minister, she kind of backed off from that idea. But it certainly removes one of the talking points. What the opposition needs to do is they need to find talking points, an alternative vision for the country to what the LDP has offered. And also, I would say they also need to show some different faces. It would be good to see some different faces in Japanese politics.
Gerard, always insightful. Thank you so much. Bloomberg Opinion columnist Gerard reading for us. Meantime, Franklin Templeton sees 2026 as a pivotal year for AI as companies figure out how to deploy the technology. Speaking at the World Economic Forum in Davos, CEO Jenny Johnson also talked about their investment strategy with more market volatility ahead.
Volatility is opportunity for active managers, right? And so, look, this administration has shown us that there are surprises around the corner, and so you have to position your portfolio. Franklin Templeton, we have clients in 160 countries. We're going to celebrate 80 years next year. We've been through a lot of administrations. Our job is to make sure our clients have their investment portfolio that is really diversified so that they can actually take these kind of short-term shocks. And if you do it right, you can get through it. And I think, in the case of President Trump, look, think about what the markets did after Liberation Day. We were all like, oh, my gosh. And you know what? We came out pretty okay on the tariffs. China, it was going to be 100%, right? The markets reacted to that. A little less. You got through that. I think we'll get through this latest
Is this because the U.S. economy is resilient, or the world economy is resilient, or?
Well, it's both that, and believe me, I think AI. We haven't even begun to see the impact of AI on individual companies. I think the next really exciting thing is the companies within sectors that actually get it right. They will take off, leaving the others behind in that sector. And so right now, it's been the picks and shovels that have really been the ones that have gotten the evaluation advantages. It's going to be those companies, and it takes time for them to figure it out. So that, of course, is part of the volatility. I think the other thing is,
Jenny, is it productivity that they work on, or just in general, like spending and to upgrade their systems?
It's going to be hugely transformative in the productivity. And by the way, you actually have seen in the U.S. companies for a decade productivity was running at about 1%. We're now closer to 2%. It's massive, which is why I also think you've seen not so many jobs created and yet companies growing, because we're getting there are 157 million people working in the United States. We've had a 1% productivity. That's 1.5 less people that you need for the same kind of growth. And so definitely AI productivity, and I don't think that's in the numbers yet. I think that the productivity gains are from the technologies that have been kind of the last decade, cloud servicing, other things, digitalization. So the AI, it's going to take time, and there's going to be winners and losers in it. But the pace of it is so dramatic, faster than even I thought it would be.
Franklin Templeton CEO Jenny Johnson speaking there as we continue to watch the broad downside across Asian markets today, with the Nikkei falling more than 1%. This is Bloomberg. South Korean stocks under pressure in the first half an hour of trading. That was a quick reversal after earlier gains. We're talking about the Kospi falling for the first time in 13 sessions. Even the Kosdaq tech heavy down 0.7%. And all of this coming after the longest winning streak that matched since 1984. Given the robotics rally that we saw, Hyundai Motors, Tucson, for example, were gaining ground. And we're still very close to that target by President Lee Jae-myung of 5,000 for this year for the Kospi. The Korean won, though, under pressure against the U.S. dollar, as well as those darlings of the tech rally. We're talking chips. We're talking about Hyundai Motor, O.S.K, Hynix, Samsung Electronics, all down at the moment. Still, the optimism is there for the South Korean rally to continue. We're talking about 90% gains since the past year. The CEO of Korea Exchange pretty confident that the world-beating rally in South Korean stocks could extend as the nation presses ahead with efforts to improve shareholder returns and lure global capital. Speaking exclusively to Bloomberg, Jung Eun-bo also shared where he sees the Kospi going next.
저는 5천 이상
I think the Kospi can extend beyond 5,000 and towards 6,000. Since the year before last, we have made efforts to increase shareholder returns through various programs, which have been supported by the government through policies and legislative revisions. Recently, South Korea's main industries, such as chip, defense, and shipbuilding, have been more competitive, which appears to have led to a new value up for the Korean stock market. It's nearing 5,000, but I think beyond that, even 6,000 is possible.
Now let's talk about trading hour extension. So Korea Exchange said this week that it's going to extend trading hours to 24 starting the end of 2027. And it's going to introduce 12-hour trading starting this June. Why does Korea Exchange have to pursue this extension of trading hours?
In light of these global trends and also to attract foreign investors, I believe expanding trading hours is inevitable. While monitoring the transition to 24-hour trading in the US this year, we believe we should move to a 24-hour trading system ourselves by at least the end of next year. Doing so would help attract overseas investors and ensure greater alignment with global market standards. As a transition, we plan to start 12-hour trading from June.
The won's weakness has been a big concern for South Korean authority, and once South Korean stock become a lot more attractive than now and have retail investors come back to the domestic market, do you think that can help stop won's weakness?
I think it would absolutely help. From a macroeconomic perspective, despite Korea running a sizable current account surplus, I believe the fundamental reason the won continues to weaken lies in the capital account. The first factor is the outflow of foreign currency driven by corporate overseas investment. The second is capital outflows stemming from domestic investors' investments in overseas assets. Together, these flows have been a key driver of the weakness in the won. In that context, the impact of portfolio investment on the exchange rate, often exemplified by so-called global ant investors, could begin to normalize as domestic investors return to the local market, and more importantly, as foreign investors increase their investment in Korea. I believe that process could serve as a catalyst for stabilizing the currency exchange rate.
When you said a few years, South Korea will be able to get an upgrade to the DM index with the MSCI, and how soon, a few years, do you mean?
The president aims to join the Developed Market League within his tenure, so that appears to be the final target that South Korea should pursue. It might take a few years, as it takes 1 or 2 years before the final reclassification is determined after joining the watch list first. Even if we start the process right now, the procedure will take several years.
And there are also concerns that the upgrade to the DM index would actually trigger funds outflows. What's your thoughts about these concerns that the upgrade may not be necessarily a good thing for the South Korean stock market?
Fundamentally, global capital is far larger than domestic capital. It's so large, the two are hardly comparable. If Korea is reclassified from an emerging market to a developed market, there will be mandatory allocation requirements for global capital. Therefore, I believe the inflow of capital will be substantially greater than the outflow.
Let's talk about some of the issues related to Korea discount. So one of the priorities that the Korea Exchange have is delisting the so-called zombie firms in market and accelerating the delisting process. Why is this important to resolve Korea discount?
About 2,800 companies are listed in South Korea. In the US, about 5,500 companies are listed on the New York Stock Exchange and the Nasdaq. The US GDP is about 15 times bigger than South Korea, while the market capitalization is 30 times larger. But the number of listed firms is only 2 times bigger. If you do the math, the market cap of individual firms in South Korea is about 1/15. In that sense, we think too many companies are listed in South Korea. In the future, these zombie firms must be forced out quickly to restore market trust. These unprofitable companies are easy targets of stock price manipulations and other unfair trades. To enhance confidence in our domestic stock market, we should do speedy work on rooting out zombie firms.
Korean Exchange CEO Chung Eun-bo speaking exclusively with Bloomberg's Yoo Kyung-hee in Seoul. Now, let's take a look at how Greater China futures are faring. The Hang Seng fell quite steeply just a day ago. This is how futures are pointing. But it was interesting. Yesterday, amid the risk-off moves, it wasn't just Korea that kind of held its head above water. The TAIEX also did pretty well. We are seeing, though, futures pointing to those declines. Then you put that along with the data from China. Dismal fixed asset, property investment. Yet the expectation is for China to keep LPRs steady today. Our Asia equities reporter Charlotte Yang joins us now for a preview of the market open. So Charlotte, what are we expecting for China's loan prime rate?
Yes, so the consensus among economists are expecting the one-year loan prime rates, which is the corporate rates, to remain at 3%, and for the 5-year LPR rates, which that guides mortgage rates, to remain at 3.5%. So while Chinese central bank has signaled, their stance for monetary easing, they're also not in any rush to act. And the potential reasons for keeping these rates steady includes that central banks wanted to coordinate with the fiscal policy, such as the government's funding plans, and also the recent stock market rally may be also one of the reasons behind. But Bloomberg Economics are expecting February to be the potential window where they consider changing these rates given the Chinese Lunar New Year is coming. And so for the broader China equity market, they usually don't move on LPR rates decision, but one sector that's in focus are Chinese banks, given that the rate, if a lower rates will they have implications for their net interest margin. That has been a key topic that investors have been watching for a long time.
Let's talk about that stock market rally that you just mentioned, because small caps in China have been running hot. Is this going to continue? Can we expect it to be sustainable?
Yeah, so the small cap has been outperforming the larger cap in Chinese onshore market for 6 weeks in a row. And as you mentioned, the CSI 2000 index has been up 9%, while the broader market was just up lower single digit. And we're hearing from market watchers that they see this, growing risk for pullback, as now the Chinese authorities have signaled that they are unease over the pace of rally and have raised the margin financing ratio. And there could be some more measures to come. And also, if you're just looking at the small cap themselves, they've already hit the technical overbought territory earlier this month. And a lot of these smaller cap companies, they have weaker fundamentals, when it comes to their sales outlook as well as profits. And so with this earnings season coming up, there could be more caution ahead of time. And also, if you look at historically, the seasonal pattern, it also doesn't bode well. There was, I think it was 8 out of 10 years in the past where January, usually, the small cap doesn't perform well. So it's a couple of factors weighing on this part of the market.
All right, Asia Equities reporter Charlotte Yang there. We do have more ahead on the Asia trade. Do stick around. This is Bloomberg.
The Australian government will make a second attempt today to pass new laws penalising hate speech after failing on Monday to gather enough support. The laws were bundled with legislation on gun control in response to last month's terror attack at Bondi Beach, which left 15 people dead. Bloomberg's Paul Allen joins us now with more. Paul, why was the government not able to get this done on Monday?
Yeah, you mentioned the lack of support there, and it's important to remember while the government does have a handy majority in the lower house, in the Senate, it's a different story. It does need the support of the Greens or the Liberal National Coalition to get things done. So that support wasn't there. Now, there are a number of things in this bill that couldn't get the support, among them this idea of the criminalisation of the promotion of hatred. And there was a whole discussion over what does hatred mean. The interpretation was too subjective. Also, that first draft had a big focus on racial vilification. The Greens felt that created a hierarchy of protections, leaving out other groups like religious, disabled groups, or discrimination based on sexual orientation. So that was removed as well. There was also a loophole there that offered a narrow defense for religious leaders quoting religious texts. Now, Jewish groups feared that that could create an exploitative loophole for hate preachers as well. There was another aspect to it where the Home Affairs Minister could designate organisations as illegal hate groups, and that was seen as potentially curbing free speech or as overreach as well. There was just an overall sense that this was very rushed, so it went back for more negotiation. So a refreshed version is coming to the House today.
So, Paul, what does then the new bill contain? Will it get passed today?
Yeah, it has a much better chance today. A lot of those contentious elements were removed. There was also a toughened penalty for religious or spiritual leaders who do advocate violence. There would be a 10 to 12-year prison sentence for that as well. Also, the gun control laws that were bundled up with this bill have been stripped out, and there will be a separate vote on that held this morning. But we understand there were lengthy talks yesterday afternoon and into the evening between the Prime Minister, Anthony Albanese, and the opposition leader, Susan Lee. So an agreement was reached there, but even though there's still no agreement in the Liberal Party caucus, so we could see a number of members crossing the floor when this does eventually come to the vote this afternoon. But the government now bringing it back, confident that they've got a deal, and this time they've got the numbers.
Paul, thank you so much. Paul Allen in Sydney. Turning now to Australia's ties with the US. They remain deep, anchored by trillions of dollars in trade and investment, as well as the AUKUS Security Pact. But tariffs, shifting supply chains, these are testing the partnership as geopolitical factors reshape economic and defense alliances. Joining us now is Arthur Sinodinos, who previously served as the Australian ambassador to the US. Ambassador, great to see you. Talk to us first about the state of play with the relations between the US and Australia, and perhaps beyond the economic priorities, security arrangements as well. How reliable a partner does Australia see the US against the backdrop of everything we've seen with Greenland and potentially with NATO as well?
Well, Avril, great to be on the program. I mean, the US has indicated through the national security strategy and through other pronouncements from the president and others, the focus that they have on the Indo-Pacific and on being, if you like, a balancing power in the Indo-Pacific. So I see that commitment to the security in the Indo-Pacific and the alliance with Australia to be as strong as it has ever been. I know there are questions being raised about the role of the US in multilateral situations and in alliances, particularly with what's happening in Europe, and certainly in relation to Indo-Pacific. They've been saying all of the right things that we would expect about the role that they would play in the region, always remembering that America is also a Pacific power. It's not just a European or Atlantic power.
What about, as we watch for who next will be the ambassador to the US from Australia, how much does it matter, the personality involved, given what we saw with Kevin Rudd and perhaps the way in which we know Trump tends to operate?
Well, I think any ambassador who goes there has to be able to establish productive relationships with the administration, the Congress, and with think tanks and others. So they have to be a senior person, probably a political person, I would think would probably be the best choice. But they would go at a time when the level of security and defence cooperation between the two countries is very high, and with major projects like AUKUS to be delivered. So it needs someone who has the chutzpah to be able to get their point across in the Trump administration and be able to build bridges to other parts of the US establishment, because there's so much bipartisan support for Australia in Washington.
You actually were ambassador to the United States during President Trump's first term. What would you say were some of the lessons that you could take and perhaps even apply to this second term? And if there's anything that the new ambassador to America should do?
I think, Shery, what I got out of the first term is that we are dealing with business people in the White House, deal makers. So it's all about getting to the bottom line. We saw this with the critical minerals deal that Prime Minister Albanese struck with President Trump last year. It's all about outcomes. What are the actionable outcomes? And so if you take this way of thinking to Washington in terms of finding areas that we can cooperate for mutual benefit, outcomes that they can see clearly, then I think that's when the relationship works at its best. It is a very transactional environment, but in Washington, to a greater or lesser extent, it's always been transactional.
In that minerals deal that you just mentioned, worth $3 billion, we know that they were supposed to establish a security group between the two countries. How much progress do you think has been made on that front?
As I understand it, there's a lot of discussion behind the scenes about the frameworks for cooperation, and Australians will be represented in Washington in February when the administration does another critical minerals forum. There have already been some announcements of deals with Australian companies. I think things are proceeding, but what I said to people after the signing of the agreement is it's up to Australia to push this in the relationship, because the US administration, a lot on their plate, they get distracted. We have to make sure the deals are coming up to Washington so that they can be done.
At the same time, I wonder if you could also share your thoughts, because countries are trying to secure access to critical minerals. How would you perhaps rate the progress that Australia has made? We're hearing about how they want to stockpile critical minerals as well.
Well, we have announced we'll stockpile critical minerals in Australia, and that's important to the US because of the security implications of many of these minerals. Many countries are seeking to do deals with Washington, and Washington is open to that. But Washington has given us a great framework with this agreement from last year. So it's now up to Australian companies to take advantage of that. Export-Import Bank, the White House, the Development Finance Corporation, the Department of Energy, Department of Commerce, they're all open to talking to Australian companies about this. I sometimes deal in this sector, and I found the Americans are very receptive, but they want to get to the bottom line, is to have a discussion which leads to an outcome.
Amid all this, how aligned would you say Washington and Canberra are in the way in which they want to tackle China's economic and military rise?
I think there's a lot of commonality. It's not about being unfriendly towards China. It's about persuading China that being a member of the international order, responsible member of the international order, rather than seeking to recast that order in their own image, is ultimately in their own interest. And that the order and stability of the region, what people in the region want is for people to get on with each other. Having America in the region as a counterbalance to China, I think is important to many of the countries in the region. They may not say it as openly, or openly do what Australia does in this context, but we speak for many in the region who say they want a strong US presence to continue, and Australia works to maintain that presence and commitment of the US in the region.
Well, President Trump wants to make or remake the international order in his own image, and with his Board of Peace, which he's expected to talk about during Davos this week. What do you make of that initiative, and what should Australia do when looking at these new initiatives coming from the Trump administration to really remake the global order?
Well, I think when it comes to Gaza, anything that can be done to take the process of peace forward and rebuild the region will be important. I don't know whether Australia will ultimately be part of the board in relation to Gaza. In relation to other things that President Trump may be doing in other contexts, the thing for Australia is to look at this in terms of how does this impact our national interest. We're not here either to barrack or to be against President Trump. We're here to prosecute Australia's national interest. And does what he wants to do in Venezuela or Greenland or other places, how does that impact on our national interest? And we have to think also about whether over time we can maintain not just a strong system of allies and partners in our region, but a strong system of allies and partners across the European theatre and other parts of the world, as well as the Indo-Pacific, so we can create a strong sense of democracies working together to maintain those democratic norms and rules that we've all come to rely on and appreciate, and which reflect deeply held values that we share.
Ambassador, it's been great chatting. Thank you so much for taking the time. Arthur Sinodinos is former Australian ambassador to the US. We have more on Australia ahead every Tuesday at 11:40 a.m. if you're watching in Sydney, 8:40 a.m. in Hong Kong. Plus, you can tune into the Bloomberg Australia podcast, which delves into the biggest stories shaping the country's role in global business. Find it on Apple, Spotify, or Bloomberg.com. More ahead on the Asia trade. This is Bloomberg. Let's take a look at the market reaction. Cash trading, of course, today has resumed on U.S. Treasuries after a U.S. holiday. And amid the rising tensions between the U.S. and Europe over Greenland, you are seeing that sense of yield curve bear steepening. So the selling on the long end, perhaps also reflected in other parts of Asia, given what we're seeing in Japan as well. Shery.
Yeah, the Japanese yen holding steady. Not seeing a lot of that safe haven move that we saw in the Japanese currency, but you can see right there that it's really that global risk-off sentiment, right? Even the Kospi falling 0.8% after gaining ground at the open. We're talking about the first declines in about 13 sessions or so. The Nikkei also down 0.9% as the Asian stocks now are at the lowest in about a week. That's it from the Asia trade. Our markets coverage continues. We're looking ahead to the start of trade in Hong Kong, Shanghai, and Shenzhen. The China show is next. This is Bloomberg.